The US and China, the world's two largest economies, are locked in a high-stakes trade war. This conflict impacts global supply chains, the cost of goods, and the future of international trade. Join us as we explore the origins, key players, and potential outcomes of this economic battle. The tariffs imposed by the US on Chinese goods have led to increased costs for American businesses and consumers. These tariffs have also disrupted supply chains and led to uncertainty in the global market. In response, China has implemented its own tariffs on American products, affecting industries such as agriculture and manufacturing. These countermeasures have further escalated the trade tensions between the two nations. The trade war has had a ripple effect on the global economy, affecting markets and trade relationships worldwide. Countries around the world are feeling the impact of the US-China trade conflict. As the trade war continues, the future of international trade remains uncertain. The outcome of this economic battle will shape the global economy for years to come. The US-China trade war is a complex and evolving issue with far-reaching consequences. Understanding the origins, key players, and potential outcomes is crucial for navigating the future of global trade. The trade war stems from a fundamental disagreement over international commerce rules. The US adopted a protectionist stance, while China defended free trade. This clash has disrupted global supply chains and heightened geopolitical tensions. In 2018, the Trump administration imposed tariffs on Chinese imports, citing unfair trade practices. These tariffs aim to make Chinese products more expensive, encouraging American-made alternatives. The goal was to revitalize domestic industries and bring back manufacturing jobs. Tariffs created winners and losers in the US economy. Some industries benefited, while others faced increased costs, passing them on to consumers. The agricultural sector, a major exporter to China, was hit hard by retaliatory tariffs. The trade war's ripple effects were felt globally, causing market volatility. Multinational corporations faced tough choices about absorbing costs or relocating operations. The conflict raised concerns about the future of globalization and international trade. China responded with a multi-pronged strategy, including retaliatory tariffs and strategic investments. Beijing targeted key US industries like agriculture to exert pressure. China also leveraged its consumer market to signal the need for a favorable trade relationship. The trade war accelerated regionalization in global trade. Countries sought new trade partnerships to reduce vulnerability. China strengthened ties with Southeast Asia, investing in technology and resources. The trade war became a battle for technological supremacy. The US targeted China's tech sector with tariffs and export controls. This rivalry threatened to stifle innovation and disrupt global tech supply chains. The trade war disrupted global supply chains, injecting uncertainty into commerce. Companies faced higher costs and had to rethink sourcing and production. The conflict exposed vulnerabilities in the globalized manufacturing system. The tech industry was profoundly impacted by the trade war. US and Chinese tech sectors faced pressure to decouple supply chains. Export controls on sensitive technologies complicated international collaboration. The auto industry exemplified the trade war's disruptive power. Tariffs increased costs for American automakers and stymied Chinese ambitions. The trend towards regionalization reshaped auto manufacturing geography. Market volatility and global slowdown. The US-China trade war sent shockwaves through global financial markets. Investors grappled with the unpredictable consequences of the trade conflict. The interconnected nature of global markets meant tremors could quickly reverberate across borders. The trade war exacerbated concerns about slowing global economic growth. The IMF repeatedly downgraded its growth forecasts, citing tariffs, uncertainty, and reduced business investment as key factors. Section 2. The consumer crunch, rising prices and household budgets. While the trade war played out on a global stage, its effects were also felt acutely at the household level, particularly by consumers who found themselves grappling with rising prices for everyday goods and services. The tariffs imposed by both the United States and China translated into higher costs for imported goods, which were ultimately passed down to consumers in the form of higher prices. This increase in the cost of living was particularly noticeable for essential items like groceries, clothing, and electronics. American consumers, accustomed to a wide array of affordable goods sourced from China, began to see prices for these items creep upward as tariffs took effect. While the Trump administration argued that the tariffs were necessary to protect American jobs and industries, the burden of these tariffs fell disproportionately on consumers, many of whom were already struggling to make ends meet. The trade war also had a ripple effect on the prices of domestically produced goods. American businesses that relied on imported components or raw materials faced higher input costs due to tariffs, forcing them to raise prices for their own products. This dynamic, known as cost-push inflation, contributed to a broader increase in the overall price level, eroding consumer purchasing power and putting a strain on household budgets. The trade war's impact on consumer sentiment was significant. As prices rose and uncertainty about the future mounted, consumer confidence waned, leading to a pullback in consumer spending, a key driver of economic growth. This slowdown in consumer spending further exacerbated the economic headwinds created by the trade war, highlighting the interconnected nature of the global economy and the far-reaching consequences of protectionist policies. Section 3. Navigating the labyrinth, adapting to an unpredictable world. The United States-China trade war ushered in an era of heightened uncertainty and volatility in the global economy, forcing businesses, investors, and policymakers to adapt to a new reality where traditional assumptions about trade, investment, and geopolitical relations were no longer reliable guides. The trade war served as a stark reminder that globalization, once seen as an inexorable force driving economic integration, could be reversed or significantly altered by political decisions. For businesses, the trade war highlighted the importance of agility, diversification, and risk management. Companies with global supply chains were forced to re-evaluate their sourcing strategies, seeking alternative suppliers in countries less affected by trade tensions. This often involved trade-offs between cost, quality, and reliability, as businesses sought to balance the need for cost competitiveness with the imperative of ensuring the resilience of their supply chains. Investors, facing heightened market volatility and geopolitical risk, had to adjust their investment strategies accordingly. Traditional asset allocation models, based on historical correlations and assumptions about market behavior, were no longer sufficient in an environment characterized by unpredictable policy shifts and heightened geopolitical tensions. Investors increasingly sought diversification across asset classes, geographies, and sectors as a way to mitigate risk and enhance returns in a more uncertain world. Policymakers, tasked with steering their economies through turbulent waters, faced difficult choices. The trade war underscored the limitations of protectionist policies, demonstrating how tariffs and trade barriers could harm domestic industries, raise prices for consumers, and disrupt global supply chains. At the same time, the trade war also highlighted the need for governments to address legitimate concerns about unfair trade practices, intellectual property theft, and national security. Globalization at a crossroads. The US-China trade war has sparked a debate about the future of globalization and free trade. It exposed vulnerabilities and fueled economic nationalism. Critics argue it led to job losses and income inequality. Proponents highlight lower prices and innovation. The trade war is a pivotal moment in the globalization debate. Section 2. The price of protectionism, weighing the costs and benefits. The US-China trade war provided a real-world experiment in the costs and benefits of protectionism, offering valuable lessons for policymakers and businesses alike. While the Trump administration argued that tariffs were necessary to protect American jobs and industries from unfair foreign competition, the economic consequences of the trade war were mixed, with both winners and losers emerging from the fray. On the one hand, tariffs did provide a temporary boost to certain domestic industries, particularly those directly competing with Chinese imports. The American steel industry, for instance, experienced a resurgence as tariffs made imported steel more expensive, leading to increased production and job creation in some areas. However, these gains were often offset by losses in other sectors of the economy. Businesses that relied on imported components or raw materials faced higher input costs due to tariffs, forcing them to raise prices for their own products or absorb the losses, potentially leading to job cuts. The agricultural sector, a major exporter to China, was particularly hard hit by retaliatory tariffs, leading to lost sales, lower commodity prices, and financial hardship for many farmers. Moreover, the trade war contributed to a climate of uncertainty and volatility that hampered business investment and slowed economic growth. The imposition of tariffs, often announced and implemented with little warning, made it difficult for businesses to plan for the long term and make informed decisions about sourcing, production, and pricing. This unpredictable environment led to a heightened sense of caution among businesses, with many opting to delay investment decisions, postpone expansion plans, or hoard inventory as a hedge against future disruptions. Section 3. Charting a new course towards a more stable and equitable global economy. The US-China trade war exposed the need for a more transparent and equitable global trading system. Reforming the WTO to address digital trade and intellectual property protection is crucial. Greater international cooperation is needed to tackle climate change and pandemics. Investing in education and innovation ensures the benefits of globalization are widely shared. Section 1. The unfinished chapter, Navigating a Transformed Landscape. As we conclude our exploration of the US-China trade war, one thing is abundantly clear: the global economic landscape has been irrevocably altered. This is not a conflict with a clear winner or a definitive end date. Instead, it represents a fundamental shift in the dynamics of global trade, investment, and geopolitical power. The aftershocks of this trade war will continue to reverberate for years to come, shaping the decisions of businesses, investors, and policymakers worldwide. The trade war has shattered the illusion of a decoupled global economy, where economic decisions could be made in isolation from geopolitical considerations. The interconnectedness of global supply chains, financial markets, and technological innovation has been laid bare, demonstrating how actions taken by one nation can have far-reaching consequences for the entire world. This realization demands a recalibration of expectations and a reassessment of risk across all sectors of the global economy. The trade war has also accelerated a trend towards regionalization, as businesses and countries seek to reduce their dependence on a single market or supplier. This shift has the potential to reshape global trade patterns, creating new opportunities for some countries while posing challenges for others. Navigating this evolving landscape will require a nuanced understanding of regional dynamics, a willingness to adapt to changing circumstances, and a commitment to building resilient and diversified supply chains. The trade war has underscored the importance of adaptability, resilience, and a willingness to challenge long-held assumptions. The old playbooks of globalization, based on the pursuit of cost optimization and a blind faith in the efficiency of markets, are no longer sufficient in a world characterized by geopolitical rivalry, technological competition, and heightened uncertainty. Knowledge is the ultimate hedge against uncertainty. Staying informed about global trends is crucial for mitigating risk and capitalizing on opportunities. This requires continuous learning and understanding interconnected global challenges. For businesses, it means monitoring trade policies and supply chains. For investors, it means understanding geopolitical risk and diversifying portfolios. For policymakers, it means balancing globalization's benefits and challenges. Cooperation and compromise are key to a stable global economy.